Picoin is a new type of cryptocurrency. It was created to make it easy for people to mine crypto on their phones. Unlike Bitcoin, which uses a lot of energy to mine, Picoin uses a different method. This method is called proof of trust. It lets people mine Pi by simply using an app on their phones. Pi Network wanted to make cryptocurrency accessible to everyone. They believed that mining crypto should not be difficult or expensive. With millions of users joining before the official launch, there was a lot of excitement and anticipation surrounding Pi Network. Many people hoped that Picoin would become very valuable. They believed that its unique approach to mining and its large user base would make it a success. However, the launch of Picoin did not go as smoothly as some had hoped. The Pi Network launched its Picoin on February 20, 2025. It was listed on some cryptocurrency exchanges. For financial gains attracted millions of users worldwide. However, the price of Picoin did not stay high for long. And broader economic conditions. Each of these played a role in the coin's sudden decline. One reason was that many early miners decided to sell their Picoin as soon as it was listed on exchanges. These early adopters had accumulated significant amounts of the coin and saw an opportunity to cash in. They wanted to cash in on their free Picoin while the price was still relatively high. This mass selling created a sudden influx of supply in the market, which the demand couldn't match. This created a lot of selling pressure, which pushed the price down. The market was flooded with Picoin, and buyers were hesitant to purchase at the inflated prices. The sharp decline in Picoin's price highlighted the volatility of the cryptocurrency market. It served as a reminder that the market can be highly unpredictable and influenced by a variety of factors. It also raised concerns about the long-term sustainability of projects that rely heavily on hype and speculation. Many began to question whether Picoin had a viable future, or if it was just another flash in the pan. This sudden drop left many people wondering what had caused it, and what the future held for Picoin. Investors were left to ponder whether this was a temporary setback, or a sign of deeper issues within the project. Many people had been mining Picoin for free for months or even years before the launch. These early miners were enthusiastic about the potential of Picoin, dedicating their time and resources to accumulate as much as they could. They believed in the vision of a decentralized currency that could be mined using just a smartphone, making it accessible to everyone. They had not invested any money in it. This meant that their financial risk was minimal, and they were essentially playing with house money. The idea of mining a cryptocurrency without any upfront investment was appealing to many, especially those who were new to the world of digital currencies. When they saw the price go up, they decided to sell their Picoin to make a quick profit. The sudden surge in price was a golden opportunity for these early miners to cash out and realize their gains. They were eager to convert their digital assets into real-world money, taking advantage of the market's excitement. This is a common pattern with new cryptocurrencies, especially those that are given away for free through airdrops. Airdrops are a popular method for new projects to distribute their tokens and create buzz in the community. However, this often leads to a large number of tokens being sold off quickly once they hit the market. The act of early miners selling their Picoin created a large supply of Picoin on the market. This influx of coins from early adopters flooded the exchanges, making it difficult for the price to sustain its initial highs. The market was suddenly saturated with Picoin, and the supply far exceeded the demand. At the same time, there was not enough demand from buyers to match this supply. Potential buyers were either unaware of Picoin or skeptical about its long-term value. Without sufficient demand to absorb the excess supply, the price began to decline. This imbalance between supply and demand is what caused the price to drop. The basic economic principle of supply and demand played out in real time, leading to a significant decrease in the value of Picoin. As more coins were sold, the downward pressure on the price intensified. This phenomenon is not unique to Picoin. Many new cryptocurrencies experience similar patterns when they first enter the market. The initial excitement and hype often give way to a more realistic valuation as the market adjusts to the new supply. It is a common occurrence in the cryptocurrency market where early adopters often sell their holdings for a profit, putting downward pressure on the price. This cycle of early selling and price drops is something that many new projects have to navigate as they seek to establish themselves in the competitive world of digital currencies. This selling pressure from early miners was one of the main reasons for the Picoin price drop. As the market continues to evolve, it will be interesting to see how Picoin and other new cryptocurrencies manage these challenges and whether they can achieve long-term stability and growth. And gain widespread acceptance. This limited access and reduced liquidity further contributed to the downward pressure on the price. Investors tend to avoid assets that are hard to trade, leading to a decrease in demand and, consequently, a drop in price. This made Picoin less appealing to some investors. The combination of low liquidity, limited access, and lack of major exchange listings created a challenging environment for Picoin to thrive in the competitive cryptocurrency market. Section 6. Limited real-world utility. Unlike some other cryptocurrencies, Picoin did not have many real-world uses at the time of its launch. This means that there were not many things that people could buy or do with their Picoin. Some cryptocurrencies can be used to buy goods and services or to access decentralized applications known as dApps. However, Picoin was still in its early stages of development. Its ecosystem of dApps and use cases was still limited. The lack of real-world utility made Picoin less attractive to some investors. These investors prefer to invest in cryptocurrencies that have a clear purpose and are already being used in the real world. This lack of utility raised concerns about its long-term value proposition. Section 7. Regulatory and market uncertainty. The cryptocurrency market is known for its volatility. This means that the prices of cryptocurrencies can go up or down very quickly. At the time of the Picoin launch, there was a lot of uncertainty in the cryptocurrency market. This was due to various factors, including regulatory concerns and macroeconomic trends. Some governments were considering introducing stricter regulations for cryptocurrencies. This uncertainty made some investors nervous. They decided to sell their cryptocurrencies, including Picoin. This contributed to the overall downward pressure on the market. The broader market sentiment and external factors also played a role in Picoin's price decline. Investors often become more risk-averse during times of uncertainty, leading to sell-offs across the cryptocurrency market. This uncertainty in the market made Picoin a riskier investment. Section 8. Future outlook and potential for recovery. Despite the initial price drop, Pi Network is still under development. The team behind Pi Network is working on building more features and use cases for Picoin. They are also working on getting Picoin listed on major cryptocurrency exchanges. If they are successful, the price of Picoin could potentially recover in the future. However, it is also possible that the price of Picoin will continue to fall. The future of Picoin is uncertain. It is important to remember that investing in cryptocurrencies is risky. Some experts believe that Picoin has the potential to become a successful cryptocurrency in the long term. They point to its large and active community, as well as its unique approach to mining. However, it is essential to conduct thorough research, consider the risks involved, and make informed decisions. Section 9. Conclusion. The launch of Picoin was met with a lot of excitement and hype. However, the price of Picoin dropped sharply after its launch. This was due to a number of factors. These factors included early miners selling their Picoin, the absence of Picoin from major exchanges, and the limited real-world utility of Picoin. The future of Picoin is uncertain. It is possible that the price of Picoin will recover in the future. However, it is also possible that the price will continue to fall. It is important to be aware of the risks involved in investing in cryptocurrencies. You should never invest more money than you can afford to lose.